If you want to be successful, find out what the price is and then pay it. Scott Adam. My friends, the price to be successful in learning how to chart the market, that is, getting good at technical analysis, knowing when to buy and when to sell in your practice trades. How do you do it? 10 to 15 minutes a day, that is all we ask. It's free. But you know what? The hardest thing to do is not come up with money to be able to pay for training. It's spending the 10 to 15 minutes a day that you can do on your own for free. People just don't do it. They talk about it, they do it for a little while, or they try to catch up on the weekends or whenever they hear a hot stock tip. My friends, that's not what it is about. It is 10 to 15 minutes a day, every day. If you will dedicate yourself, you can do this. Now, what's going on in the markets? Up again today, the S&P 500 up almost 2%. The NASDAQ 100 up over 2.5%. We see 20-year bonds up 0.17% and gold up 2.3%. Fascinating. Let's jump into these charts and see what's going on in this wacky world as the U.S. still tries to figure out who our president's going to be. What do we see going on this week? We see, look at the candle. It's hard to even see on the screen. Look at the candle wicks on the top and bottom, almost a doji for the week. Green open box is where it is a very small one. We can see where the peaks and the valleys are here. Price percent oscillator still negative, but heading up. Derivative oscillator still negative, losing downward momentum. Lots and lots of indecision there. Overall, still down. Now look at this 2-day chart. Boom, huge up candle. Haven't seen a candle that big in a long time. A long, long time. Maybe going back to June. Anyway, maybe there, let's see, let's compare. Nope, not even close. So maybe back in June or so. Big, big up candle. Now, of course, this latest candle represents Wednesday and Thursday where things were a-booming, pushing through the weekly trend line up to the Bollinger Band as far as the wick on top. No wick on the bottom. Big open box green up candle, but no crossover. Hasn't happened. We'll continue to watch, see how this plays out. Look at the half-day chart. Crossed over going up back on the 3rd and has just boomed. Keep going up, 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 pushing through yesterday afternoon. That was Wednesday afternoon, pushing through the weekly trend line, even in the morning on Thursday, and really just solidifying that. I'm sorry, that was on Wednesday, solidifying it on Thursday. Still have one more day before our weekly candle finishes drawing. So we'll watch. And again, during these times of flux, just keep your powder dry. Pay attention. We do have a great training for you today that I think you will find helpful. Dollar cost averaging, problems, and our solution. Again, that training, we put out trainings every single day. Our subscribers get them. How do you become a subscriber? Go to chartingwealth.com, sign up for free. We don't sell or spam that list. Okay, let's look at the NASDAQ 100. We can see that it too has a very small green spinning top. It is open box. It's sitting right there below the weekly trend line. Price percent oscillator still negative, heading up. Derivative oscillator losing downward momentum. Go to the 2-day chart. Look at it. Booming up through over the last 2 days, the 2-day trend line, and then up through the weekly trend line, closing above that. Look at the price percent oscillator heading up, still hasn't had enough energy to cross yet. And we see the derivative oscillator still negative, losing downward momentum. Go to the half-day chart, and of course, crossed over later than we saw in the S&P, crossed over in the morning of the 4th, and we see things continuing to go up on Wednesday and Thursday. That's where we are. Again, waiting to see how stocks are going to sort of finish the week, where things are going to be. Is there going to be enough energy? But you can see we had all that down energy the prior week. That is the week ending Friday the 30th, the last week in October. And then this big green spinning top. Lots and lots of indecision. Now those are Heikin-Ashi candlesticks. If you don't know what Heikin-Ashi candlesticks are, check out the end of this video. We're going to put a link on the screen so you can learn why we use Heikin-Ashi candlesticks in our type of charting. Very, very helpful. So that's where we are. Stocks are in flux, both the S&P 500 and the NASDAQ 100, the tech stocks. But two big booming days up. We'll continue to watch, see how this shakes out. Now, we go to bonds. Typically, stocks are booming. You would expect bonds to be going down, maybe gold too. No, bonds are up a little bit, not a lot. Looks very similar as far as the candle goes to what we see going on in stocks this week. We got a wick on the top, wick on the bottom, a green spinning top, almost a doji sitting right there on just above the weekly and the 2-day trend lines. Price percent oscillators flat and negative. Derivative oscillator losing some downward momentum. Go to the 2-day chart. It ended almost crossing over, just not quite. Big green up candle pushing through the 2-day and the weekly. So we'll continue to see. You know, we got to have a 2-day crossover to portend a weekly crossover, but hasn't happened yet. May happen by the time the next 2-day candle closes. That would be Monday afternoon because you have to go through Friday and then Monday. What's up on the half-day chart? Crossed over going up in the morning of the 4th, Wednesday. Pull back Wednesday afternoon, up on Thursday morning, and then about the same in the afternoon. Slow down in that movement. But again, price percent oscillator, derivative oscillator moving up on our smallest of charts. So again, we're just waiting to see where the trend's going to go. Remember, we are trend followers. That's why we use the price percent oscillator, a lagging indicator, and the derivative oscillator, triple smooth version of the RSI, which is our leading indicator. Remember, the price percent oscillator, for those of you who aren't familiar with it, I'll put that also in the training at the end of today's program. On the PPO, why we use it. It's a percentage version of the MACD, which is otherwise unbounded. That's what's so nice about the price percent oscillator, is if you're looking at an index or you're looking at maybe a whole bunch of different bond funds, the nice thing about the price percent oscillator is it's percentage based, which again doesn't get you caught up in unboundedness, so you can't compare between different stocks, indexes, stocks within an index. That's the nice thing about it, one reason that we use it. So that's where we are on bonds. Now let's look at gold. Gold up 2.30%. Big up day for gold. Enough to see that we have pushed through the weekly down trend line. So what do we have so far? We have a lot of up movement on gold, a little bit of down movement too. Green open box. First green open box, big one we've seen in a while. Derivative oscillator losing downward momentum. Price percent oscillator on that weekly chart is just flat. Now look at that 2-day chart. It crossed over at the end of the day. It's been a long time before we've seen since we've seen a crossover on that 2-day, and we're going to go ahead and mark that. That is nice to see. We want to make sure that we get that on our chart because that has to happen before we have that weekly crossover. Maybe that'll be happening in the not too distant future. Give us a chance to go long on our practice trades on gold. People say, I've heard, hey, gold's going to go to $15,000 an ounce. Well, you know what? I want to ride that baby up in my practice trade. We're definitely going to be watching for that. And again, we weren't the suckers that jumped into gold when it peaked, were we? We saw gold pulling off on that and moving down. So again, we did very well in that run up to gold, but we didn't get screwed. Like if you listen to the commercials in the market, they always seem to peak about the time gold peaks. And about the time they bring all the TV watchers in, the non-chart readers in, that's about the time it crashes. So we did not get caught on that. Now lastly, let's look at the half-day chart, continuing to build nicely, crossed over going up on the afternoon of Monday the 2nd of November. And we saw things boom up for another day, down for a day, and then hammering up on Thursday, which is nice. So we'll continue to watch, see where things go. Don't forget, at the close of the market tomorrow on Friday, we will produce our weekly review for all of our listeners. That's also where we ask you to fill out your weekly market worksheet, daily market worksheet, weekly market worksheet, trade worksheets. Those are all PDFs in your show notes every single day. Be sure to subscribe so that you get all the trainings, you get the PDFs. All those things are free. Just go to chartingwealth.com, put in your name, email, address. You want to supercharge that training, you'll be filling out those daily market worksheets, weekly market worksheets, and most specifically, trade worksheets when you do your practice trades. That's how you learn the nuances. That's how you set your rules and you learn the real gist, the real nuggets. You keep those things. You start your own trader's almanac. My friends, thanks so much for being with us. Again, you want to supercharge that training too. Support us here at the channel. Buy our book, Charting Your Way to Wealth. Second edition, autographed copy, waiting for you. Follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Here come the 2 trainings that we've set up for you. Hope you enjoy them on Heikin-Ashi candlesticks and the price percent oscillator.